The SEC is about to ruin crypto as we know it. They're investigating and suing a number of crypto firms for breaching securities laws. If they gain oversight of the crypto industry, you can bet that the US will no longer be the global leader in crypto innovation. It will force many Web3 entrepreneurs to move their operations to countries with more lax regulations like Singapore or El Salvador. The recent actions of the SEC has spooked the crypto world. The stir-up started with this guy, Ishan Wahi. He was a former manager at Coinbase, the largest crypto exchange in the US, and he is facing criminal charges that could land him in federal prison for decades. He had an insider view into which new token would be listed on the exchange, an event that normally causes these tokens to increase in price. He used this knowledge to buy these tokens for cheap before the listing, then sell them for massive profits. He also tipped this information to his brother and another friend to do the same.
Naughty, naughty.
In July, the US Department of Justice is indicting them in first ever cryptocurrency insider trading tipping scheme. On the same day of the announcement, the SEC also filed a lawsuit against the same 3 defendants for securities fraud, arguing that 9 of the crypto assets they traded were securities. The SEC is now also investigating Coinbase for listing those 9 tokens as unregistered securities.
Bloomberg has learned that Coinbase is facing a U.S. investigation on cryptocurrency listings. This move comes as a chorus of U.S. regulators to do more to oversee the crypto industry has grown louder.
The issue at hand, whether the cryptocurrencies that Coinbase lists should have been registered as securities.
These events have caused ruckus in the crypto industry. It has massive implications on how the crypto space will be shaped in the US. But to understand the importance of whether crypto assets should be classified as securities or not, we need to first go back in time to the Great Depression. The national pastime had become speculating on the stock market in 1928. The market was largely unregulated, causing manipulation and fraud to run rampant. Then came October 29, 1929. Speculating frenzies took over, leading to the bubble popping on what's now known as Black Tuesday. This ushered an economic contagion that will wipe out American prosperity, resulting in the Great Depression. The Securities Act of 1933 was passed to protect the investing public against deceptive or misleading marketing practices. The U.S. Securities and Exchange Commission, or SEC, was created the following year to enforce the act. Anytime securities are sold to the public in the U.S., they would oversee it. And the key word here is security.
Tesla Motors. Shares of the electric car maker Tesla Motors are up.
A security is an investment in a company with the expectation of future profits. When we hear the term securities, we commonly think of stocks or bonds, but there's also something called investment contract. This phrase was intentionally included in the law because it allowed for flexibility and broader interpretation.
What are you saying?
To understand why this matters for crypto, we need to first go back to Florida in the 1940s. You can thank this man, William J. Howey, for providing the framework that the SEC would use for the next 7 decades. He owned a vast stretch of orange groves, but he was a savvy businessman looking to expand his enterprise, the Howey Company. He sold half his land to investors, who then signed a 10-year service contract to allow the company to retain full control of the land and manage all aspects of the orange business. In return, the buyers would get a cut of the company's profits.
Cash money.
He used this method to finance future developments and accepted funds from passive investors.
I want you to understand, we don't do anything illegal whatsoever.
A lawsuit was filed and subsequently won by the SEC in 1946, stating that these land sales were investment contracts and therefore unlicensed securities, even though the company hadn't sold any shares. This resulted in the creation of the Howey test, which is a 4-part framework the courts still use today. Something counts as an investment contract if it is an investment of money in a common enterprise with the expectation of profit to be derived from the efforts of others. Can't get around securities laws just because you don't use the words stock or share. This brings us to the infamous case the SEC has against Ripple.
SEC is preparing to sue that crypto startup for selling unlicensed securities. The asset in question here is called XRP. It's a cryptocurrency much like Bitcoin. Ripple uses it for its clients, which are mostly businesses and banks, to send instant payments across borders.
The SEC believes that XRP fits into the Howey test. Ripple, the enterprise, created a bunch of XRP tokens, kept a lot for itself and its executives, sold the rest to the public for more than $1 billion, with the promise that if the company Ripple is successful, that XRP price would go up.
Pretty sneaky, sis.
Of course, Ripple denies that XRP is a security.
The first step of determining it could XRP be a security is you have to have an investment contract. And our point is, Ripple doesn't have a contract.
Ripple even hired former SEC chair Mary Jo White as a lawyer in a showdown with current SEC chair Gary Gensler. But Gensler has his mind set on one key attribute.
If you're raising money from the public and the public is in anticipation of profit based upon that promoter, sponsor, that group's efforts, that's within the securities laws.
If you're a crypto token issuer or exchange, the one test you want to flunk is the Howey test. Gensler believes Bitcoin is the only cryptocurrency that won't be under his oversight due to its decentralized nature and lack of yield. It seems that the SEC will be going after proof-of-stake assets as well, which would now include Ether, the token behind Ethereum. This is alarming because the SEC previously declared both Bitcoin and Ether as non-securities in 2018, when they both used the proof-of-work system. In September, Ethereum transitioned from an energy-intensive proof-of-work system, which uses mining equipment to secure the network and record transactions, to a proof-of-stake system, where validators need to collateralize or stake their own Ether to secure the blockchain, which requires no mining equipment and reduces energy consumption by 99%. The US Commodity Futures Trading Commission, or CFTC for short, say that virtual currencies such as Bitcoin have been determined to be commodities. The CFTC is a US derivatives watchdog, and they already regulate futures contracts for Bitcoin and Ethereum. Right now, it's still unclear whether the CFTC or the SEC will have complete oversight over cryptocurrencies. But it's not just crypto the SEC is going after, but the virtual art market as well. You know those pictures of apes that were worth millions of dollars last year? That's right, the SEC is investigating Bored Ape Yacht Club's creator, Yuga Labs, for securities violations. Industry leaders have been petitioning the government to establish a new framework designed specifically for digital assets, arguing that a 20th century statute should not apply to technology of the 21st century. If digital assets were to be regulated as securities, crypto companies would incur way more expenses just to be compliant. Additional costs like hiring lawyers and advisors will leave many startups unable to get off the ground, not to mention the additional time and effort it will take. Perhaps most alarming for the industry, anyone who invested in something that later deemed to be a security has the right to get their money back. This means that crypto startups whose tokens have gone down in price would be exposed to massive class action lawsuits. There's so much at stake for the crypto industry, and the outcome of these lawsuits will shape the space for decades to come. Wire has a great article on the whole situation, which I will link below. And hey, if you stuck around this far, you're an absolute legend. Please don't click off yet. I just wanted to take the time and say thank you for sticking around and watching to the end of the video. You know, it takes a lot of time to research, script, film, and edit these videos. So if you liked it, I would really appreciate it if you can hit that like button. If you didn't like it, well, go ahead and hit that dislike button twice and let me know in the comment section below why you think so. On this channel, I make crypto content that will hopefully be relatable to you. So if that sounds good, please consider subscribing. Thank you so much for watching. Have a fantastic rest of the day. That's it for me. Keep compounding, and I'll catch you on the next journey.